Check 1, 2, check 1, 2. Check 1, 2, 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 check 1, 2. Okay. That's good. All right, check 1, 2, check 1, 2. See what happens to my share. Okay. Waiting for people to roll in. So just bear with me as we wait for people. Where's my Zoom thing? What the heck? All right, share the screen here. Again, we're still waiting for people to roll in. If you have any questions, go ahead and put them in the chat, or you can unmute yourself and ask me, and I will try to remember to field it. Pretty excited for this class. It's not the first time I taught it, but it's definitely let's put it this way. It's not the first time I've talked about it. It's the first time I've taught it the way I'm teaching it now. So I'm very excited about it. Can't wait to see what people's feedback is on it. If you don't know, today's topic is going to be how to figure out how much you can afford without talking to a lender. Basically, how much house can you afford? Like how to calculate, how to figure it out without talking to a lender. That's going to be today's topic. That's going to be what I'm going to attempt to teach today. So just waiting for a few more people to roll in. Again, if you have any questions, go ahead and put it in the chat or Q&A, or you can just ask it, unmute yourself and ask it. And again, I'll try to remember to answer it when we get there. See here, people still rolling in. Again, I'm really excited about this class because it's the first time I've taught it this way. And I'm excited to get some feedback and see how you guys respond and see if it actually helps, like if it actually gives you what I promise. So if you have any questions, just go ahead and put it in the chat, or you can unmute yourself and ask right away. And I'll try my best to remember to answer it. I'm gonna give it a few more seconds, about 45 more seconds before I actually start. Again, we're just waiting for people to roll in. But if you do have any questions, go ahead and ask it whenever you, you can ask it in the chat or whatever. Okay.
Hey, Larry.
Yes. What's up, boss?
Hey, this series, is it recorded in any fashion that can go back and look at those things? Do you sell it as far as, the first time home buyer thing and all the rest of that, or what's the story?
I do not sell it. My purpose or goal is to spread as much, hopefully good information as possible, as fast as possible to as many as possible. So to as many people as possible. So I do not intend to sell it because it will stifle that goal. There's a replay every single time. I usually stream it to my YouTube or some various Facebook or LinkedIn, I will make sure you get that link. Usually I have a follow-up email. It actually gives you the link to the replay. But yeah, there'll be a replay. If you can't find it, Paul, let me know and I'll make sure I'll tag you directly to the replay video after it's ready.
Yeah, my issue is there's a few other classes. I've just had some other appointments and stuff that have gotten in the way of the last few classes, and so I was really limited, if not even able to join at all. And I was hoping to catch up on it a little bit. I like your material.
I appreciate it.
Would like to see more of it.
I appreciate it. And so these classes you're not required to be a part of if you want the replay. The replay will always be available. So you can always be like, hey, Larry, I missed a couple of your last classes. Do you have replays? I'll give you the link right away. Those are automatically streamed. The Real Estate Roundtable, that's a private conversation amongst the panelists. So we don't put that publicly, but the classes, the veteran mortgage advisor classes, the first time homebuyer classes, as well as the social media classes, what I call Real Estate Robot Army, those are always going to be public. So just ask me if you need replay and I'll definitely direct you there. Okay. No problems. No big deal. I actually want those to be watched and promoted as much as possible. So feel free to ask me anytime.
Awesome. Thanks.
No problem. Okay. So we have a few people here. I'm going to go ahead and get started. Again, I'm very excited about this class because it's the first time I've taught it. Well, I've taught this concept before, but I never really did a whole class dedicated to it. And the whole point of these classes, the first time home buyer webinar, whatever you call it, is to get a deep dive on every topic that I've actually presented in like a first time home buyer class. So first time home buyer classes are usually general. We kind of touch upon a few details. We kind of gloss over it, but we don't really get deep into it. The whole point of these weekly webinars is to really take one of those points and get really, really deep so that, we can elaborate on what I'm trying to present. So this one's going to be about affordability. Will Phillips asked, hey, Larry, thanks for hosting. Will the recording be available after class also? Yes, well, we just covered that. It will be in a replay, and I will make sure that you guys get access to it. Usually through email, I will follow up and send you a link to the replay. But if you can't find it, let me know, and I will send you the link directly. So I'm going to just have it real quick. It will be available on YouTube, or just reach out and I'll send you a link. All right. Okay, so I'm gonna go ahead and get started. I really appreciate you guys being here. This is Larry, the mortgage guy, your mortgage insider, and I want to welcome you to the first time home buyer deep dive weekly class. Okay, so what I do is I take a portion of what I teach as a first time home buyer seminar, and I get really, really deep into that topic, like I said. So let's go and get started. Okay. A quick introduction. My name is Larry Lee. I'm a certified veteran mortgage advisor and branch manager at the Larry Lee team at Van Dyke Mortgage. Hold on one second. I'm going to meet somebody real quick here. I don't know, he's muted. Okay. Okay. Like I said, I am a certified veteran mortgage advisor and branch manager at the Larry Lee team at Van Dyke Mortgage. I'm a licensed loan officer since 2016. I always joke that I talked to someone about my wife and how long she's been in the business, and I said about a couple of years, and she looked at me like I was crazy because she was like more like 5 years, and I was like, whoops. So that means I've been for longer than 5 years because I introduced her to the mortgage business. So I think it's 6 years based on my calculations. Either way, I would qualify for a mortgage because I've been in the business longer than 2. Okay. I have a side hustle as a social media marketing coach and running my own ad agency, Robots LLC. The reason why I bring that up is because I'm trying to merge my 2 passions, the mortgage business, as well as my social media, I guess passion, and try to promote this class or this mortgage knowledge, whatever. So I'm hoping that you guys will help me by sharing it and of course attending, and of course hopefully if you see something of value and you want to share it to your buyers, I would love that, right? I mean, again, the whole idea is to spread as much of this, I believe, good knowledge to everyone to help them get into the home buying process and know what they're getting themselves into. I'm licensed in 11 states: in Arizona, California, Florida, Illinois, Indiana, Louisiana, Michigan, New Hampshire, North Carolina, Tennessee, and Texas. Okay. My mission is that I love the mortgage business, but was fed up with the lack of education and information clients were provided during the application process. So I created a first-time home buyer coaching class for mortgage clients, as that provides instant access to answers to questions and simple explanations to the mortgage process and how to qualify. I also provide one-on-one coaching for those who want it. And what I really mean is I actually created a class. You can look it up, homebuyersecret.com. It's actually a class for people to get content and knowledge about the mortgage business, and they don't have to talk to me ever. Like, you don't have to sign up or log in. It's actually there. Okay. And also you can search on YouTube and you find all the content there as well. And I don't know who's watching that, so I don't care. Unlike other loan officers, I made it my passion to coach first-time home buyers on the mortgage process that makes all the difference of how I have helped hundreds of people get on the right path to home ownership, with many of them becoming homeowners. You remind me of many of my smart, successful, and savvy clients who are now homeowners because you are taking the right step on the home purchasing process like they did. The home buying process is very confusing to most people, but that is why I am here, to simplify this process and make sure you are 100% prepared in the home buying process and to become ahead of the competition. And what I mean by competition is that there's people out there making offers on the same homes you are. I want you to be way ahead of them when it comes to your buying power. I want you to know exactly how much you can buy. I want to help you get fully underwritten. We provide that midnight mortgage. That's a little plug for me, but we can underwrite you 100%. So when you make an offer, you can actually give a loan commitment. Basically, your offer is as good as cash. We call it TBD or to be determined. We get you conditionally approved, with the conditions being the home and the appraisal, and that's it. So you're ready to close as soon as the house is appraised and approved. So you can actually offer quicker closing times and such. And I think that makes you competitive versus everyone else, no matter what loan product you have. Okay. Before I go to my why, I see a couple of people came in. I'm gonna go ahead and add them in real quick. Let's see here. You are. Oh, everyone's already in. Okay, cool, perfect. All right. My why, again, of course, is my wife and my children, especially my sons, Bruce and Hunter, because they are on the spectrum for autism. And my goal is to have enough resources this year to put them into ABA therapy, because I've heard lots of great things from people I trust, basically friends who are parents of children who are on the spectrum. My second why is, of course, the mortgage business, but specifically veterans, because I think they're underserved. And I'm going to give you a post put on Facebook that kind of explains my why about the veterans. My father was living in Da Nang, Vietnam during the fall of Saigon. My mother lived in Saigon. My father left by helicopter, my mother by boat. It was U.S. soldiers who helped them get in the helicopter and on that boat. They met in Hong Kong, China. If it wasn't for U.S. soldiers, my parents may have not survived, met, and had me. And I wouldn't have what I have today. I might not even exist. Those U.S. soldiers are veterans now, assumingly. Thank you, vets. I owe you my life. And I really do feel like I owe a debt of gratitude to my vets. So I hope that by helping veterans in general, I can kind of give back to those who served and helped my family. This is usually my home buyer seminar that I give, and I just want to give you the topics, but I'm going to specifically stick to the first topic, which is honest answers to top 10 home buying questions. So the question that people ask is how much can I afford? So that's what I'm going to tap into. Okay. Before I get into that, I'm going to give a disclaimer. I am not trying to piss anyone off or make anyone feel stupid. I am simply trying to provide transparency, because most loan officers are doing a horrible job of telling you the truth. Also, any information I share is general knowledge I acquired through training and experience. Every situation is subject to a case-by-case basis, and exceptions are always possible, especially with different lenders and financial institutions and states, meaning the rules or laws in Texas are different from like the rules and laws in California, etc. Okay. All right, so top 10 questions. The question I'm going to focus on is, how do I know how much I can afford, right? And my answer, and when I say honest answer, I literally say, duh, that's the reason why you talk to a loan officer, right? That's how you know how much you can afford, okay? But if you have to try to figure it out without talking to a loan officer like myself, because I know us salespeople can be very intimidating, this is what you have to think about, okay? The different loans have different debt to income ratio. Debt to income ratio, what is that? It's basically, and I'm gonna show you the formula, okay? Is basically your recurring monthly debt divided by your gross monthly income. How much you are spending versus how much you are making. And when I say spending, I'm not talking about like food and your cell phone and the movies and gas. I'm talking about debts that you must pay, like if you bought furniture from, say, Cons and you financed it, or if you have credit card debts, or if you have student loans, things that are debts that you must pay, okay? And then you divide that by how much you make a month, Okay. It sounds easy enough, but a lot of people don't understand how much they actually have in debt because their credit report usually tells us differently from what they tell us they think their monthly debt is. And again, income is another thing. A lot of people try to guess how much they actually think they make, but we calculate, we find out that's actually different. Sometimes in their favor, but most of the time not in their favor. Someone's asking a question here. You can't hear audio. Does everyone else hear me? Can someone like raise their hand or not raise their hand, comment or
I
whatever?
hear you.
Okay.
I can
So,
hear you.
okay. Thank you. Okay. Thank you. Thank you. Will every others say they can hear me? If you can't hear me at all, hopefully the replay will have audio. Yeah, it kind of sucks because you guys don't see me, right? So that means you don't know if I'm talking or not. And I don't know why it won't let me show my face. I mean, not saying that my face is better looking than y'all's, but I want to be able to, maybe I can spotlight for everyone. Maybe we can do that. Okay. But that way you can tell if I'm, yeah, there it is. That way you can tell I'm actually talking. Okay. So there you go. I figured out a way. I learned Zoom like by the second, basically. Okay, you can see me too. Thank you. So yeah, again, Will, hopefully if you can hear this, you can read the chat, but basically there'll be replay later. Okay. So again, that's what debt to income ratio is. Now, the reason why it's not that simple is because again, when you actually look at someone's credit report and you look at someone's income, the numbers are not obvious. These are variables, right? And our job is to find out what these variables ultimately are, like how much you actually make a month and how much you actually owe a month. Okay. And that gives you your DTR, debt to income ratio, which you guys probably heard before. Okay. So I'm going to go back. Again, when you look at the back end and front end, those are two different calculations. Okay. Front end is how much the house is a loan to your income, right? So I'll use a really rough number. If you make $4,000 a month and your house payment is $1,000 a month, then your front end ratio is 25%. Okay. Again, let me give you that number again. If you make $4,000 a month and your house mortgage payment is $1,000 a month, including taxes and insurance and all that good stuff, then your front end ratio is 25%. Okay. So let's say on the back end, you owe no debts, right? You don't owe anything. You have your house payment and you have your income, and that's all you're using in terms of your variables, then your back end ratio is also 25%. Okay. But we rarely see that. Okay. So let's pretend you owe $1,000 on your mortgage payment, and then you owe $1,000 in car payments. Let's just pretend you have $1,000 payment, right? So now your debt to income ratio is different because you have higher debt, right? But the front end ratio is still 25% because it only calculates the house. But that back end ratio is now 50% because you're making $4,000. You're spending $2,000 on your debts because you have the mortgage payment and you have the car payment, which makes it 2,000. So 2,000 divided by 4,000 is 50%. Okay. So your front end ratio in that example is 25%, but your back end ratio is 50%. Okay. That's the difference between front and back. The reason why that's important, because let's pretend you think your debt to income ratio or your qualifying debt to income ratio is 50%, right? So you make $4,000, you're like, okay, well, I can afford a $2,000 mortgage payment because you can go up to 50%. The truth is that's not correct because front end ratio has their own limits. Yes, the back end ratio can be 50%, but the front end ratio might be only 30% or 35%, maybe 40%. Okay. So you have to kind of take that into consideration. So no, you can't go up to the same front end ratio as your back end ratio. Okay. Those are two different qualifying amounts. Okay. So it's important to know that. So just because you have no debts does not mean you can use up to 50% of your income to buy a house. Again, there's a limitation on front end versus back end. Okay. Which is common sense because back end is saying, okay, well, we have the mortgage payment, but you also have other payments you have to worry about. So let's make the back end ratio a little bit higher, but you can't just like max out your front end ratio to the point where it's above the 30-40% range. Someone has a question. I'm gonna check real quick. You sound very knowledgeable. Hey, Fox, I really appreciate that. Well, hopefully I am. You and I have met a couple of times. And hopefully I've given you nothing but great information every single time we've worked together, every single time you've attended one of my classes. Okay, so let's look at the specific loan products. Okay, conforming, which is conventional. That's what conforming is. Okay, Fannie and Freddie, like your vanilla, your bread and butter, your normal loans that everyone gets, right? The historic max is 28% on the front end and 36% on the back end. That's why you see two numbers, okay? 28%, 36%. So right here, this example, if you had a $2,000 mortgage payment, you make $4,000 a month, you wouldn't qualify. Okay, well, actually, you wouldn't qualify on both ends, okay? Now, they're allowing up to 43% DTI. When this 43% is mentioning the back end ratio, not the front end, the back end, okay? Because that's normally what we go by, the back end ratio, okay? And in some cases, you can go up to 45 to 50%. Very rarely do I run DU or debt stop underwriter, which is like the automated underwriting system, and get an approved eligible, which is the result you want, means you qualify, and anything above 40, 45%. But it does happen. I think I achieved like a 49 point something percent before. Maybe I've gotten one like above 50%, but it probably ended up not qualifying at the end. We had to figure something out, but because the desktop underwriter is not perfect, okay? But ultimately, if you get desktop underwriter to say approve eligible, you can move forward with it. And if everything lines up, then the underwriter will approve it. But very rarely we get anything above 50%, okay? For FHA, which is a little exceptional, FHA is a government loan, and they understand that people need more than they can afford conventionally, right? So like conventionally, they just want to afford it, but they're like, man, I need that extra room because I have, an extra kid or whatever, right? FHA is a little bit more forgiving, okay? So they actually have higher back end and front end ratios, okay? And you can go up to as high as 55%. It's actually 56.999 or some crap like that, or 50, I forgot the numbers, but 55 is the rule of thumb. But really, you're gonna have a tough time getting qualifications if you're at that point, okay? You want to stay around 50% at the most. But don't get me wrong, I've closed loans with above a 55% debt to income ratio before. It's unbelievable, but it happens, okay? But you definitely want the automated underwriter system to give you an approved eligible, no matter what number this is, okay? Now, for VA loans is a little bit different than the rest of them. Again, it's a government loan, okay? They say 41%, okay? And you go up to as 50%, which is similar to conforming loans, okay? But in reality, VA loans are easier to qualify for in terms of debt to income ratio than the conventional loans, okay? When I say compensating factors, I'll give you an example. You have a rent schedule where it shows you've been paying rent for the last 12 months and the rent amount is higher than your mortgage payment, right? So let's say your rent amount is $2,100 a month and you've been paying 12 months of that, and you're buying a house where your mortgage, including taxes, insurance, and HOA, is $2,000 a month. Well, you have proof that for the last 12 months, you've been paying more on rent than what you're trying to buy. So there's no payment shock, is what we call it, right? Payment shock is a thing, right? So there's no payment shock. You're basically just paying the same thing or less in terms of housing. So that is something to be considered. Payment shock is like if you have, like, let's say no rent and you go to $2,000 a month, that's payment shock. That's like, okay, we don't know if you really can handle the extra $2,000 being added to your debt to income ratio. Or if you like have a $500 a month rent and you go to $2,000 a month, that's again payment shock, right? So if you have a weak file, like you're barely qualifying, but there's payment shock, you might not qualify. Like the underwriter might deny it based on just payment shock. Okay, it's a thing, right? Okay, so USDA loans, same thing with USDA loans. You have front end and back end ratios, right? And again, they expect findings on automated underwriting, and there's also compensating factors. So if you see the numbers are different. And this is one of the reasons why you do want to talk to a lender, because who knows what loan you qualify for? Who knows what loans might be the best fit for you? Who knows where you can get the best rate, or the best, because guidelines also treat different types of debts differently. Like, for example, student loans, they're treated differently by FHA than they are with the conventional loan, right? So you might think your debt to income ratio is one way, but the way a loan product might look at it might be calculating your debt to income ratio differently, because they look at student loans differently. So that's why it's really important to talk to a lender, because there's so many nuances that's impossible for you to know where you're going to end up, right? So here, a loan is proof that you're not going to know enough. I mean, we barely know enough, right? Like sometimes we have to look up the guidelines ourselves. I mean, we're really good at Google, right? We're really good at Control F, finding, right? And the reason why I guess we're qualified versus you is because we understand the language, we understand the knowledge and the laws, right? We're familiar and we know where to look, we know where to find. So what would take you maybe a day will take us 5 minutes to find, right? So that's one of the reasons why, even though we're Googling a lot of stuff, we're searching a lot of stuff, we're qualified to do because it's kind of like our job, right? I mean, just look at lawyers. Lawyers don't memorize every single law. They have to do research, right? That's basically what we do. We research to make sure we're following the correct guidelines, okay? So again, to calculate it, and this is really dangerous. I'm giving this calculation because I don't want people out there pre-qualifying themselves, right? Like you can't, like if someone says, where's your pre-approval letter? I was like, well, I don't need a pre-approval letter. I did the math and I definitely can qualify. I Googled and I talked to Larry, the mortgage guy, and I used his formula and I know I can qualify. That's not going to fly, right? And that's actually very dangerous, like I said, because who knows what your debts really are? Who knows what your income really is? I've had people tell me that their income's 10,000 a month, and then I look at their tax returns and they wrote off that they lost $12,000. They didn't make $120,000. They actually lost $12,000. So the income went from 10,000 to negative 1,000. So they're actually losing money every single day they go to work. Right. And they were in shock when I told them that. I said, well, I mean, it's kind of obvious. You told the IRS that you lost $1,000 a month. I mean, come on, but yeah, again, people, sometimes they don't know, or they're in denial maybe, or they don't think we'd catch them. I don't know, but income is really something really hard to calculate. Even I can't calculate it as well as a lot of these other lenders can. I actually have systems and teammates who help me. So even I am not a good at calculating income versus a civilian, right? So it's very dangerous. I'm giving this this formula, but I'm giving it to you because I want you to at least think about it and understand it. And if you really want to take a chance, try to calculate yourself. And again, the whole point of my class, Home Buyer Secret, is to give you our secrets and let you decide what you need to do, what you can do, what basically just give you the power to do whatever you want with the knowledge, so that you don't need to talk to one of us to really figure it out. And if you're really good, maybe you can figure it out. Okay. Now, another thing about DTI, debt to income ratio, which a lot of people don't understand, is that different payments are categorized differently. So when I ask people, what are your monthly debts? They'll be like, oh, well, I pay this much in rent. I pay this much in electricity. I'm like, see, this is the thing. That's not part of your DTI. Okay. And I put on the bottom here, not including your DTI. So you have to realize what is actually included and what's not included. Okay. So these are just examples, right? Your mortgage payments, which is obvious, property taxes, which is part of your mortgage payments in a way, homeowners insurance, again, is part of your mortgage payments, car payments, right? Money that you'll, if you finance the car, student loan payments for sure, minimum credit card payments. So let's say you have $1,000 credit debt and you're paying $25 a month. That's part of your debt to income ratio. Even if you pay $100 to the credit card company a month every single time because you like to pay extra to avoid interest or whatever, doesn't matter. We use the minimum credit card payment, whatever's on the credit report. Okay. Finance purchases like furniture, like for my example is cons. I see cons a lot. Personal loan payments, child support payments. This is a big one. This is one that people kind of not think about, right? It's like, do you make child support payments? Okay, well that is part of your DTI. That is included in your liabilities, and you must pay that. So it's going to be added, right? Alimony payments, right? If you owe alimony, I think for veterans it's called separate maintenance. I don't know the term for sure, but I think that's what it's called. Any cosign loan payments, are you paying on another house, right? And government debts, like to the IRS, like let's say you owe taxes. Okay, those are definitely going to be including your DTI. And sometimes it takes more work to find out that you have something you owe. Like a student loan payment, we might not see it on the credit report, but then we'll pull CAVRs, is what they call it. I don't remember the term, but it's like CAVIRS or CV. I forgot the spelling. I think I have it in my class once, but based on the CAVR search, we'll know that you have like a student or government debt, but we might not see it in your credit report. Okay. A CAIVRS. That's what a CAIVRS. So you can Google that and find out what CAVRs really mean, but it's like another background search on any kind of government debt. Okay. So you might not have a clear CAVRs and we have to look at it. And sometimes their CAVRs shows that you can't even buy a house because it's not clear, meaning you have something on it and you have to set up a payment with whoever it is you owe money to, which can take up to 90 days, right? So it's important that you think about those kind of things, okay? Again, monthly payments that are not included: electricity, water, garbage, car insurance account, cable bills, cell phone bills, health insurance, grocery. Now, how do I figure this out? Well, think about it this way. If you owe money and you have to make a payment, that's going to be on your DTI for the most part. If you don't owe money, then you don't need to add it. Like a cell phone bill, I guess, unless you finance your phone, I guess some people do because they buy like really expensive phones. For the most part, you're not going to pay a debt towards that. You're just paying to keep the subscription or service alive. Like you can actually cancel car insurance if you want to. It's required by law, but it's not required in terms of your credit report, right? You can really go without car insurance and not pay it, and that's not going to be in your credit report unless there's a collection, like you owe money. But if you're just deciding you don't want car insurance and you cancel it, that doesn't affect your DTI, right? If you if you decide not to go with electricity, like you want to be a what do they call those people? I forgot what there's the Amish, right? If you want to be people who just don't want electricity and you don't want to pay it, that doesn't affect your DTI, right? That's your choice, right? It's nothing that you owe. Okay. And yeah, I actually had people say, I pay my bills on time. I always pay my electricity, my gas. I'm like, yeah, but you also got to pay the IRS. You got to pay your student loans. But you don't really get credit. Like I see people, and there's nothing wrong with this, okay? But I see people who will self-report. Like they'll pay their gas bill, their electricity bill, their whatever bill, and they self-report. And they're hoping that helps your credit scores. Ultimately, it doesn't really make a difference. Okay, when you add it to like your credit report, it might look good on like Credit Karma or Experian, whatever. But when it comes to the mortgage, it doesn't really help you. I mean, it's good to know that you're doing it and we see it, but we don't even add it to the debt thing ratio. Like we actually subtract it, we take it away, right? It doesn't hurt you in any way. Because I've actually had people tell me, oh man, I shouldn't have self-reported my gas bill, my car bill, and blah blah blah. Not really car bill, but any other bill. They say they shouldn't have done it because it's going to lower their DTI. I'm like, no, we don't really calculate that in your debt to income ratio. We actually ignore it. In fact, I was trained to delete it. Okay, so hopefully that makes it easier for you to understand what's the difference between what's on your DTI and what's not going to be on your DTI. Okay. Actually, I don't want to go to that yet. I want to see if there's any questions. Does anybody have any questions or any comments that you want to bring up based on what I just showed you or talked about? Anybody? I hear someone unmuting. You have something to say?
Oh no, you just requested me on mute.
Oh. Sorry. No, I was adding you. I'm giving you permission to talk. Sorry about that, boss. I'm gonna mute you back. Okay. Does anybody have any question? Does anybody have any comments? Maybe something that I said that was an aha or takeaway? I know I went through that fast, but it doesn't seem like it's very complicated information. Okay, no questions. That's cool. Oh, wait. Rental history. Abe Fox asked about rental history. Okay. I don't know if you're asking, does it work? Or you're asking, what does it mean? Right? I'm going to cover both. What rental history is, let's say you are renting a house, right? And you're working with a landlord and hopefully they're organized to the point where they have like a rent schedule, like they actually recorded when you paid rent, right? And then you have like your cancel checks or whatever, right? If you can prove that you did for a year or 2 years, that can help supplement and become what we call what do you call it? Compensating factor, right? Like I put right here. Let me show you what I mean by that, right? Compensating factors, right? We're saying that you might have a high DTI or debt to income ratio, but because you have proof that you've been making the same payment or higher, it can actually work in your favor, right? And maybe you don't have a rent schedule, maybe you don't have record of a rent payment, whatever, but your landlord is nice enough to write a letter and maybe show like canceled checks, or maybe, I don't know if you can show their bank statements or deposits, whatever, but if you can have some sort of documentation that you've been paying rent on time for the last 12 months or longer, and the rent is the same or higher as your mortgage payment, that can be something that's helpful. So that's what I mean by rental history and how you can use it to help you, get qualified, right? Doesn't always work, but a lot of times it can be considered compensating factor that they'll consider. Okay. So hopefully that answers your question, Abe. Any other questions? Okay. So the next one, this is something that I posted on Facebook, and I mean, again, it's dangerous to post this kind of information because, we're supposed to stay in our lane, right? I'm not a real estate agent, so I can't show people houses. I can't talk about neighborhoods. I can't talk about things that, involve the actual property. And of course, realtors shouldn't really talk about rates, and they really shouldn't talk about payments and stuff like that, right? Someone has a question. Okay, cool. So I'm still going to give it to you because two reasons. Number one, again, I'm about transparency, and again, my class or my philosophy is home buyer secret. I'm going to give you everything I can as a home buyer or real estate agent, whoever, what we do as lenders, so that you know the process, you know our mindset, you know what we're doing, right? Because there's this mystical thing about lenders and how they figure things out. Well, I'm going to try to demystify that, right? The magic tricks, I'm going to show you what the magic trick is, okay? And you do whatever you want with that knowledge, okay? But it is dangerous, and it's not exact, but it can give you sort of a ballpark. At least it'll help you eliminate certain things. But I put on social media, pro tip. I put, if you're trying to figure out if a buyer can afford a home and they won't talk to a lender, because sometimes it happens, right? They refuse to talk to a lender. They refuse to get pre-approved, pre-qualified. Like, I don't want to give anyone my social security number until I know I can afford it, or I know what's out there, whatever excuse they give not to talk to a lender. You can use this formula to sort of have an idea, right? So you find out what they make a year and how much they pay in debts, like credit cards, car payments, and installments, like furniture or appliances, like they finance, like at cons, student loans, child support, if any. So the list I gave you, you can ask them those questions if they're willing to talk to you about it, right? And add the estimated monthly payments of the mortgage, including interest, insurance, taxes, HOA, then follow this formula. So let's say, I don't know, you're talking to a person, it's like, well, what's your purchase price range? And they're like, well, I don't know, but I just want to see what's out there. You're like, okay, well, let's try to guess, right? I mean, I know it's not good that we guess. We really should talk to a lender, but in order to save time and in order for me to give you the right houses to look for, let's figure this out and then ask them, what do they pay on things like this, right? They ask them, do you have a car payment? You have student loans? Do you pay child support? I mean, you don't want to get too deep into it, but if they want to volunteer, then go ahead and get the information and then add it all up, and then ask them how much they make a year, right? And they'll tell you, divide that by 12, that's your monthly income, and then put monthly income times 0.4, right? This is the DTI that we're trying to stick at, right? We're basically saying they're allowed to spend 40% of their income, right? Give or take. Again, that's dangerous, okay? But they say, like, let's say they make, again, $120,000 a year. That means they make $10,000 a month. That means times 0.4, they can afford possibly $4,000 a month mortgage, right? And and then you figure out what their liabilities are, and if they have no liabilities, then they can afford a $4,000 mortgage. They can probably pretty much buy anything, right? Within reason, of course. So you put, if their monthly debt obligation, including their mortgage payment, is not more than the DTI threshold, they will most likely qualify based on their income. So here's the example: if they only make 48,000, you divide that by 12, then that's 4,000 they make, right? So that's their monthly income. Now, income is multiplied by 0.41, then they actually afford 1640, right? If your monthly debt obligation is not more than 64, you'll be able to qualify for a VA loan. Okay. Remember, you have to include the mortgage, right? So let's say the mortgage is $1,000 and they owe $500 in credit cards and car notes, then they could probably afford it because their DTI is 1640. They can afford 1640 based on the formula, and what it sounds like based on the house that they're looking at and their monthly obligations based on when you ask them, they spend only 1,500, then they could probably qualify for that. Okay. If your monthly debt obligation is not more than 64, then you'll be able to qualify for the VA loan. Okay. If it's higher, then you call your lender, right? Like, let's say they're looking at a house and it's a $2,000 payment and they have $500 in credit cards, whatever. So their debt obligation, whatever, is 2,500, and based on the formula of their income is 1,640, then for sure they're not going to afford it. But you don't want to tell them that, right? You don't want to deny. You can't deny someone, right? You can't be like, well, I don't think you're going to be able to afford that, so I'm going to deny you on this. Like, no, it's like, just tell them. I don't know how. Again, I'm not a real estate agent, but I don't know if you can tell them, like, well, based on the information you're giving me, you're probably more closer in the 200,000 range and not the 400,000 range. I don't know. That's why we need to talk to the lender. But I do suggest that you're looking at houses around 200,000 to 300,000. And if they refuse and they're like, you're stupid, you're an idiot, you're not helping me, they might be a difficult buyer anyways. They're trying to buy more they can afford, basically. Now, they might be giving you bad information. Maybe they actually have more money, right? Maybe they're not thinking about their second job or their overtime or their their bonuses, or maybe they have a code bar that they're not telling you about, right? There's a lot of things that can be happening. So you might be stopping someone incorrectly. So that's why you do want a lender involved. But if talking to lender is not an option, this is your way to sort of filter out and figure out where everyone's mindset is, where everyone's expectations are. Okay. It is not advisable to use this data to show them houses. The purpose is so you know who not to waste time with. Again, that's the whole point, right? Especially if they tell them that if they tell you their monthly income is zero, or they get what do you call it, unemployment, then this formula is not going to work anyways, right? And because this number would be zero, right? So again, it just helps you kind of figure out who you're dealing with, right? I mean, I have a class where I talk about, like Sun Tzu, right? The war is won before it's begun, right? You need to know knowledge, you need to have information. You don't want to go out there and show people houses if they tell you certain numbers and you know that they just can't afford it, right? Why would you do that, right? So again, that's sort of a little trick on how you can figure out if a person has the right expectations and to know what kind of houses to show them if they don't want to talk to a lender. Because I do understand sometimes you have to sort of win them over. You have to show them some houses to sort of build rapport. And then maybe that's when they'll sign a buyer's agreement with you or whatever it is that you guys called. And then you can send them to a lender. So I do understand that. So this can give you a little bit of intel, right? Okay, so another pro tip, this kind of helps you with, the house that you're showing. If you need to guess a monthly payment really fast, you can multiply the loan amount, not the purchase amount, but the loan amount, because ultimately we don't care about the purchase amount. Well, I mean, we do, but in terms of DTI affordability, we need to find out what their mortgage payment is going to be based on their loan amount, right? So you multiply the loan amount by either 0.006 or 0.008. It really depends when it comes to the market, the rate, property taxes and such. But you can, so sometimes you can use something in the middle, like 0.007, right? You multiply the loan amount by that amount, and that's how much potentially the monthly payment is going to be, right? So let's say someone says, yeah, I don't know how much I'm going to afford, but I definitely don't want to go beyond my budget, which is $1,000 a month, right? So that's their number. They don't want to go above 1,000. Okay. And, they might not even know how much 1,000 a month buys, right? But they're thinking that. So when you look at a house, you can really quickly, let's say is a, I don't know, $400,000 house, and they're going to put, 20% down. Let's just say that's what they do, right? Well, what's 10% of 400,000? That's 40,000. So 20% is going to be 80,000. So you subtract 400,000 minus 80, that makes it 320,000. So you multiply 320,000 by 0.006 or 0.008, and that's what the number is going to be. In fact, I'll show you real quick. Okay, like my example. Okay. Oops. That's not what I'm trying to do here. So let's say it's a $400,000 house that they're looking at, and they say their budget's 1,000, right? That my budget's 1,000, but I really like this house. It's 400,000. So hopefully it's $1,000 a month mortgage payment, which you already know is probably not correct, but you want to do the math to show them, right? A proof of concept, right? So they're going to put 20% down, right? So you multiply that times 80, because 20% minus 100% is 80%. So this is what their house loan is going to be. The loan amount is going to be. Let's multiply by the middle number, which is 0.007, right? And that's about how much their monthly payment is going to be, give or take, right? It might be $500 higher, it might be $500 lower, who knows? But for sure, $1,000 a month mortgage payment is not going to be able to handle a $400,000 house. Okay, so they probably should be looking closer to a $200,000 house. So let's do the math on that, right? 200,000 times 0.8, which is 80% with 20% down. That's $160,000 loan amount. You multiply that times 0.007, and that's 1120. See, that's more in line, right? So it just helps you. You're not trying to do exact math. You're just trying to figure out, okay, this person is coming at me with $1,000 a month budget, but they want a $400,000 house. Probably not. They're probably closer to a $200,000 house. But again, you don't want to like turn people off or deny them, whatever. You're just using it for your own. So maybe you bite the bullet. Maybe you're showing them a $400,000 house, but based on what they told you, they're not gonna afford it. But you show them anyways because you want to win them over, and you're still willing to help them if their purchasing power is half of what they're looking for. Because you don't say no to business, right? Let's say you rather than buy a $400,000 house, but the most they can afford is $200,000. You'll still take that commission, right? So you show them the $400,000 house just to kind of get their trust. And then they decide to go ahead and work with you, and they ask for recognition for lenders, and you send them my information, right? Because I'm the one teaching you how to do this. And then I pre-qualify them for 200,000. And then maybe they'll be mad, and you go, well, there's definitely a challenge there, but we can still find houses that you might love based on that price point. Let's go ahead and go to work, right? But it's best to set expectations, obviously, with them, but really that's not your job, right? Your job is to just become the representative no matter what they're buying. My job is to find out how much they buy. So what is the point? What is the saying? You guys sell the dream, and we sell the nightmare, right? We sell the reality. So yeah, but just for your information, at least you can set your own expectations, right? I don't want you guys to be disappointed. Like, oh, this guy sounds really good. He wants to buy a $400,000 house. He has 20% down, but his budget is $1,000. But I don't even know how much the math is. So let me go and just show this $400,000 house, and hopefully he affords it. Well, I'm telling you, if you do this math, you'll know that he's not going to be able to afford it. So just make sure you understand, if you're going to bring this guy out to look at a house, be prepared that he's actually going to be able to afford maybe half of that. Okay. And maybe that'll make your life easier. Who knows? Right. So yeah, let me see here. I'm going to present real quick back to my screen, and it looks like I got a question. No question. I don't think. Someone raised their hand though. Oh, Abe, go ahead and ask your question, Abe. You there? Hopefully. Abe. Okay, maybe not there. If you if you do come back, Abe, go ahead and just go ahead and ask the question, unmute, whatever. If for whatever reason you're feeling you're being ignored, or you can just put the question in the chat. Okay. I think I actually cut. Oh,
Hey, Larry, there's no question. I don't know how it came up as there's nothing. I'm sorry.
no, you're good. You're good. I appreciate you actually being there alive and not like sleeping while this is going on. So any other questions about what was discussed? That's pretty much all I have, right? I just want to explain to you like how debt to income ratio works, what we use to calculate it, how to calculate it. Mostly on the debt side. Income, that's going to be a totally different class. I don't even know if I should teach that, because I'm not that great at it. I'm okay, but enough to be dangerous, but I wouldn't consider myself an expert at it, right? I actually have a lot of help. With like systems, we have like what do you call it? Automated system that we put the information in, helps us, whatever. So I'd be afraid to teach a class like that. But if you have a rock solid income, let's say they're a teacher, or they have some sort of job that they've done it for the last 10 years, and it's pretty much the same income for the last 10 years, and it's W-2, it's a salary or an hourly wage, then and there's no overtime, then you can pretty much depend on the income being pretty accurate. But other than that, it's probably going to be something that we have to calculate. But yeah, if you have the income and then the debts that I just showed you, then you might be able to guess, right? And again, guessing is really irresponsible and dangerous in the business, but sometimes we do what we can just to see what we need to do in terms of how we handle our clients, right? But yeah, any questions other than that? Again, I know it kind of breezed through it really fast, but just focusing on debt to income ratio, that's all we're looking at today. Okay, cool. Does anybody have any takeaways or ahas that they want to share? Like maybe something I said that they discovered today or they didn't know until today?
Good information, Larry. Thank
No,
you.
I appreciate it. Thank you. I really do feel like out of 10 people or 11 people, like only 2 people are actually alive, and the rest of them just kind of click the link I sent them to them and then they walk away. I think that's what they do. Oh, someone's putting a chat. Okay, Alicia said I'm here too. Thank you. Oh, she said I'm here. LOL. Yeah, and I've seen you a couple times. So I'm pretty confident that you're there as well. That's okay. If it's okay if you guys don't ask questions, don't feel obligated ever. Okay, it's just I want to make them more interactive. My classes are designed to be a Q&A style. Like I present information, and then I'm hoping to answer questions, because the questions help me figure out what I should teach next, what I should teach in the future, and I'll be honest with you guys, and I don't really talk about this because it's not really relevant, but I actually create these videos for YouTube content, right? So that I can download it, edit it, cut it apart, and then make videos. So not just a stream, but actual videos that's pinpointing the topics that we're discussing. So the strategy is to have my class and then also have like the Q&A side. So if someone asks like rental history, right? We talked about that a little bit with Abe. I'm going to cut the part of the video where it just talks about rental history and make that a video saying, what is rental history, or what is a compensating factor regarding rental history, whatever. And that'll be the name of my video, and that'll be a totally separate video. So the idea is to get like 2 or 3 or maybe 4 videos out of each call that I make. Right. So yeah, hold on. I got someone. Oh, that's my MBS Highway tells me what's going on with the rate, so I can be in the know like 2-3 times a day. So yeah, that's why that was there. Sorry about that. Okay, I got some chats. Lakeisha, was this recorded because I got on late? No problem, Lakeisha. I do these as a stream. So there will be a stream, and I usually follow up with the slides. So I send the slides to the people who participated, because Zoom tells me, this is why I love Zoom. Zoom tells me who actually showed up on the call based on their emails. And I will send a follow-up email with the slides and a link to the replay. Okay. So yes, you will be able to get to the replay later on for your own consumption, but also, again, with my social media and mortgage passion, I'm hoping that you will share it with people who need to know about it. Maybe your other fellow real estate agents, or maybe your buyers, right? And I try to be very transparent. And again, I don't like the word authentic. I like to just be me, right? So I might brush people the wrong way. Maybe they don't like my personality, whatever, but you still have the information and content there. So even if you don't want to work with me, I don't care. The knowledge will hopefully be valuable to whoever you share it to, and they can use it to empower themselves. So when they do talk to their preferred lender, it will be cool if it was me, but if they do talk to another preferred lender, they're actually equipped and they have expectations and they're prepared, right? So yes, that's why I record it, and that's why I stream it, and that's why I will send replays, because I literally am trying to touch the world with this knowledge. Okay, with nothing in expected to be in return. Like, I don't expect anyone to pay me or call me. I just hope that, if you do need a lender, you don't have one, and I'm licensed in your state, I would love an opportunity to help you, right? But that's really ultimately all I'm asking for, right? I've been on podcasts and calls, which I really like how they approach it. They say, if you like what I'm teaching, if you like what I'm talking about, if you're vibing with it, if you're feeling it, then the fee is that you share it, right? The fee is that you pay it forward by sharing it with someone else, whatever. And that's really cool, but I'm never going to expect that from you. Okay. But it would be really cool if you did, right? Bobby says, first time here, great information. Always try to stay in my lane, but nice to know some general info. Bobby, thank you very much. And that's kind of the whole point, right? The whole point is I'm not trying to replace myself, and I'm not trying to tell you guys to be lenders. That's not what I'm trying to do. I'm trying to, again, demystify what's going on our side. That way you can be a little bit more intelligent when you're having these discussions. Because I do know, as real estate agents, you do encounter this scenario. Like, how much can you afford? Like, what is your purchase price? And a lot of times they don't know, but they refuse to talk to a lender for whatever reason. They've heard bad things, or they know that it's a commitment. They know that they have to give their social security number, or they know lenders are really aggressive. So if they touch a lender, then all of a sudden the lender's going to call them 1,000 times. That's okay. That's kind of like the whole point of what I do. I want people to be able to get information on demand without any expectations, without any obligations. So I literally say in my videos, I don't know who you are. And if you take all my information and you follow me and you learn everything you can about mortgages and pre-qualifying or pre-approving, or again, pre-approved, and you never work with me, I'm fine with that, because I got paid by you watching my video. Because what you're doing is you're telling YouTube and whoever else that has my videos that this is a valuable video. You're telling the platforms that this is a video worth watching, and that is enough payment for me, right? But it'd be great if you shared it. It'd be great if you actually reach out to me and give me a chance to work with you. I mean, those would be great. Those would be bonuses though. The payment is you just watching it. So I'm cool with it, and I appreciate anyone who watches this. So Bobby, thank you for being here. And yeah, I mean, again, I'm not trying to replace me. I'm not trying to make you a lender. I'm just trying to give you some knowledge, so just in case you know what's going on, and it can help you maybe tailor your conversations or tailor the approach with people that you talk to, right? So yeah, I really appreciate you being here. Lakeisha says, thanks. Thank you. Okay, I get some Q&A. Geraldine asked if I'm licensed in Nevada. I am not licensed in Nevada, but I have some coworkers who are that I trust, and they might even be better and cooler than me. Okay, so if you do need someone in Nevada, I can probably introduce you to someone either in my team, maybe my wife's licensed in Nevada. She's definitely better than me, right? She's not as nice as me, I don't think, but she's definitely better. But I definitely have people I can connect you with if you're looking for someone who needs help in Nevada, right? So I appreciate you asking that question. So looks like you joined late, Carolyn. I'm gonna just put, I will send a replay, but search YouTube for Larry Lee or Larry the mortgage guy or home buyer secret, and you'll be able to find my YouTubes and replays. Okay. So I'm sending that as an answer to her question. And the other one, licensed in Nevada. No, but I have close friends, maybe even my wife, who's licensed there. Actually, I'm gonna look it up real quick. I actually have a list because I do refer some business to her because I'm not licensed in every single state. She sometimes referred me, but usually it's the other way around. But I have a list here. No, my wife is not licensed in Nevada, but again, I have people that I trust, people that, I mean, I know, I can give you a name. Her name is Dawn, who lives in Nevada, and she's licensed there. And again, she's definitely better than me. She coaches me, right? So I can definitely refer you to her if you have questions, okay? Anyone else have any questions or comments? Or Alicia says, get licensed in Arkansas. Funny enough, Alicia, I used to be licensed in Arkansas, and that was in another company. And I will take in consideration for that because I do know that there's a lot of potential there. Because again, when I was licensed in Arkansas, I did business there. But my wife is licensed in Arkansas. See, I got the list here. If you do want to be referred to her, again, she's definitely better than me. Not as nice, but she's definitely better. She might be better looking as well. Okay. And if she knows that you're a referral partner of mine, she will definitely do a good job, right? Like she won't, let's put it this way. All our sales, we get commission, right? The commission goes to the same place, right? Whether she's doing the loan or I'm doing the loan, it goes into her bank account. Okay. So ultimately she gets paid no matter what. If it's me doing the loan or if it's her doing the loan. So she'll be fine with doing a loan with anyone that I connect with. So yeah, just let me know if you have any questions. And she's great at VA loans too. A lot of the questions I have for VA loans, I ask her, right? Like she's well versed. She doesn't care about the VA loan like I do because she just does all loans, but she's definitely done a lot. So she's well versed in it. So yeah, so don't worry if she's not a VMA or veteran mortgage advisor. She doesn't care about title. She doesn't care about the glamour. She doesn't market, right? She just does her job. So yeah, if you have veteran questions, she can help with that as well. Okay, someone asking a question here. Oh, cool. All right, no problem. Thank you. So yeah, I really appreciate you guys being on this call. It sounds like we're pretty interactive, which I really appreciate. Hopefully you guys can be here next week. I do want to plug my other calls, and I usually do a good job of letting you guys know about it, but I do a social media call every Friday. Okay, first, I do this kind of call every week. The first time home buyer on Thursday. Okay, I do a social media call on Friday, and I do a veteran mortgage advisor, which is more about the VA loan, on Wednesdays. I do so Wednesday, Thursday, Friday. I have a call every day at 11 Central CST, and I will definitely put the information in the email follow-up so you guys know about it. But I do welcome you guys to be on those calls because I touch upon different topics, and I think I wish I didn't have 3 different topics I had to cover because it's a lot of work, but it is relevant and it is important because again, the VA information is totally separate. VA like specialty information. The first time home buyer, I think, applies to everyone, and the social media is really just for us to grow our business so that we can get in front of more veterans and in front of more first time home buyers. And that's just that's like my jam, right? I'm all about social media. Like I love it. That's like, I mean, that's why I have a side hustle doing social media. So I had to do the Friday one because it's just, that's my fun time. That's my playtime, right? And I can literally teach a class out of nowhere with my eyes closed when it comes to social media and not even be prepared. And I'll still believe I do an okay job, enough for you guys to enjoy it, right? So yeah, so that's why I went ahead and did 3 classes, right? So yeah, if there's no more questions, If you guys have any questions, always call or text me, email me anytime. My emails will be sending out to you guys as a follow-up. So you can always reply back to emails there. And again, I do try to do these calls every single week. Yesterday I had to cancel the veteran one because I had my kids, and I was like, that's not going to work out. Like, kids are not gonna, they're not going to respect me doing a Zoom call. So that's why I had to cancel it. But otherwise, you should see me every single week. Okay. Again, I really appreciate you guys being here. This is Larry, the mortgage guy, your mortgage insider. I'm out. Thanks, guys. Really appreciate it.